I will be ruthless.
I decked him. You don't have the balls to do what I'll tell you to do. Just like that. I said, what's that? Get rid of all of them tomorrow.
The world of finance is filled with behemoths of investing and trading. But who among these titans can really be considered the greatest of all time? Some would argue Warren Buffett is the king of investing, with annual returns that have doubled those of the S&P 500 for nearly 6 decades. Or maybe it's the Dogecoin millionaire who turned 180,000 into nearly 3 million. Legend. But if we judge investors by their returns and consistency of those returns, there is one man who stands in a league of his own. He is Jim Simons, a math professor who got bored cracking Soviet codes and shifted his focus to cracking the financial market. Since he launched his flagship fund in 1988, he's had annualized returns of nearly 40% after fees. That equates to more than 250 times the returns of Warren Buffett over the same period. His company, Renaissance Technologies, has managed to make over $100 billion in profits since its founding. The kicker? No one knows how, including people that work at the firm. It is the most secretive company in the history of finance. So much so that even competitors are hesitant to talk about him. Why all the confidentiality? Well, he is hiding one big secret, and that secret helped him become the greatest investor of all time.
So my father took the job, but he really didn't like it.
At an early age, Jim is taught a very important lesson. Do what you want in life, not what others expect of you. It's a lesson he won't forget. He is determined to do what he enjoys, and that is crunching numbers. As long as he can remember, Jim has had a natural fascination with numbers.
Was mathematics a natural thing for you?
Yeah, it was very natural. And I always liked it.
At 14, he works at a garden supply store to earn some spending money. When his part-time job ends, the owners ask the young silverback what his plans were for his future. "I want to study mathematics at MIT," he says. The two owners burst out laughing.
The guy who couldn't remember where to put the sheep manure, he's going to be a mathematician at MIT.
But Simons isn't bothered by the opinions of smooth-brained chimps. He has natural confidence in his abilities. He knows what he is capable of, and he is determined to prove himself right. After graduating high school, Jim achieves his goal and is accepted into MIT. He thrives in his coursework, and other students come to him for help. He graduates at the age of 20, but instead of immediately enrolling in graduate school, his hunger for adventure compels him to put those plans on hold. He is always thinking that there is more to life than the monotony of his day-to-day. Jim tells his friend that he wants to do something historic, that he desires adventure and wants to experience more before devoting himself as an academic. Simons and his friends then set off on a journey of a lifetime. First Mexico and then South America. Once in Mexico, they meet a family that warns the adventurous Chads about local bandits. They buy a gun and are nearly forced to use it when they are surrounded by a group of 50 angry men, some wielding machetes. Luckily, they escape death when they are arrested and put in jail for a day. Thankful to have their heads still on their shoulders, the boys quickly leave town and continue their trip into South America. Before we reveal why this is such a key event in Simon's life, allow us to be proud for a moment. Have you ever wondered what strategic moves your favorite finance billionaires make in order to stay at the top? What tactics they used to amass wealth? I'm proud because we just launched Deus Media, a free business and finance newsletter. Instead of shallow finance news by traditional outlets, we will provide you with insights that are actionable. Every week we deconstruct the biggest finance billionaire moves so that you can learn from them and emulate them at some point. Jim Simons, Chamath Palihapitiya, Elon Musk, no worries, we cover their recent power moves. The newsletter is written by a team of former finance professionals and myself. Click the link in the video description and join thousands of other people that read Megalomedia every weekend. It's free, and if you don't love it, you can always unsubscribe. Oh, and if learning how to build online income streams is more of your thing, such as micro PE, faceless YouTube channels, or copywriting with ChatGPT, check out the free Giga University newsletter too. After his adventure in South America, Simons returns to pursue a PhD at Berkeley. While studying, Jim gets married to his first wife. The couple are given $5,000 as a wedding gift.
I had just gotten married, and I had $5,000 and from wedding gifts. So my wife and I decided that we'd invest it.
Simons wants to multiply this money and drives to a nearby Merrill Lynch office where he begins buying shares. The value of his investment hardly budges though, and Simons becomes bored. He asks his broker if he has anything more exciting to trade.
He said, you should try soybeans.
High risk, high reward play. Always want to take a risk, he buys 2 futures contracts. He is rewarded for his actions and makes several $1,000s in profits.
I bought 2 contracts of soybeans, and indeed, within the next couple of days, they did shoot up, and I was quite ahead.
However, Simons doesn't sell, and the price falls. He barely breaks even. Instead of feeling like a dejected Wall Street bets trader, Simons becomes enthralled with the markets. He begins to watch the prices of stocks and commodities daily. He also starts to trade on instinct instead of using company earnings and fundamentals like most other investors. However, the pastime proves to be too much as his wife becomes pregnant and he is still working on his doctoral thesis. He reluctantly abandons his trading, but the markets will always be in the back of his mind.
But always in the back of my mind. I liked this trading business and found it interesting.
Simons returns his focus to his schooling and completes his PhD at the age of 23. He begins to teach, first at MIT and then at Harvard. But Simons becomes disillusioned as an academic. He desires more out of life than constant teaching and research. Simons wants to have an impact on the world, and he understands that money is power. The kind that would allow him to shape the world to his choosing. In order to satisfy his thirst for adventure, he quits his job at Harvard to join the Institute for Defense Analyses, or the notorious IDA. The IDA hires mathematicians to assist the National Security Agency, NSA, in detecting and breaking Soviet codes and ciphers. Although it has been decades since the IDA successfully cracked a Soviet code, this is just the kind of challenge that Simons has been yearning for.
Because you could do half your time at your own mathematics and at least half your time working on their stuff. And they paid a lot.
He begins to create algorithms to find patterns in the Soviet codes. Soon, he and his colleagues find a weakness in a Soviet message. The IDA is able to exploit this finding and crack other codes, a major accomplishment for the code-breaking Bateman. As part of his role at the IDA, he's granted a generous amount of flexibility and freedom in his work. Simons takes advantage of this freedom to work on cracking the stock market. He and 3 colleagues create a new stock trading system. They publish an internal classified paper for the IDA titled Probabilistic Models for and Prediction of Stock Market Behavior. The code-breaking quartet claimed their method of trading could generate annualized returns of at least 50%. However, the band of wannabe market wizards assume their trades would take place under ideal conditions, such as being able to trade without commissions. Although their paper had major flaws, it recognized that there were exploitable patterns in the seemingly random movement of asset prices, knowledge Simons would soon use to amass his fortune. During Jim's time at the IDA, protests against the Vietnam War begin to spread. Protesters begin to harass the IDA office he works at. They trash the building, throw eggs at employee cars, and yell at the people that work there. Simons, knowing not all researchers at his office are in support of the war, wants to explain to the protesters that they do not contribute to the war. He is interviewed by the newspaper and says that they mainly just sit around doing math all day.
Said I'm doing mostly mathematics now, and when the war is over, then I'll do mostly their stuff.
Not long after the interview is published, Simons notifies his boss about it.
I told my local boss that I gave that interview, and he said, "What did you say?" And I told him what I said. And then he said, "I got to call Taylor." He called Taylor. That took 10 minutes. I was fired 5 minutes after that.
And with that, the 29-year-old father of 3 is left unemployed. Simons is agonizing over the potential paths he can take from here. He wonders about joining an investment bank and selling convertible bonds. He doesn't enjoy the idea of teaching for the rest of his life. When asked what his ideal job is, Simons says he wishes to chair a large math department. But he believes he is too young and doesn't know the right people. However, his friend is able to pull some strings and Simons is offered to chair the math department at Stony Brook University in New York. Stony Brook has a reputation as a college with a drug problem, but they are looking for someone who can help change their image. Simons is offered great flexibility and the freedom to build out the math department as he wishes. He accepts the offer. Simons will eventually use the skills he learns at Stony Brook, building out a team of capable mathematicians, to create a team of programmers and quants that will solve the innermost secrets of the financial markets. Fast forward several years and the 37-year-old chain-smoking Simons wins the American Mathematical Society's highest award, similar to the Nobel Prize for Mathematics.
A guy named Ed Witten in Princeton started applying it to string theory, and people in Russia started applying it to what's called condensed matter.
His work would go on to be cited thousands of times over the next few decades and lead to breakthroughs in physics. It is even used by Microsoft in their attempts to create quantum computers and artificial intelligence. Simons is at the peak of his academic career, but he still harbors a desire for wealth and the power it brings. Years earlier, Simons had invested in his friend's flooring company. Business was booming and they just sold 50% of their company, giving Simons a healthy return on investment. Simons takes his profit from this venture and gives it to one of his former students, Charlie Freifeld. Charlie builds models that forecast the price of commodities based on various factors. With sugar prices soaring, Simons makes a 1000% return. This unexpected and rapid windfall awakens the sleeping giant within Simons. He is reminded of the similarities between Charlie's modeling and his own paper he wrote while in the IDA years before. He's also tired of life as an academic. He craves a different kind of challenge with a different kind of reward. At 39 years old in 1977, Simons becomes convinced that the currency market is presenting major opportunities to those who know how to exploit it. He decides to take the leap and begin his transformation from a highly esteemed academic to an investing legend.
You know, I'm going to try another career altogether. And so I went into the money management business, so to speak.
It is 1978 and Simons has left Stony Brook to start his investment firm, Monimetrics, a combination of the words money and econometrics. He uses his knowledge in building algorithms to find subtle patterns in asset price movements. He also combines this knowledge with the work he did running the math department at Stony Brook. Simons begins to look for talented mathematicians to help him find ways to exploit the patterns he believes exist in the market. It isn't long before he has highly capable brainiacs to begin work on solving the mysteries of the market. Now that Simons has built the A-team, he seeks funding. He wants to raise $4 million, but comes up short. However, he launches the fund anyway. It is time to meet his destiny. The trading style Simons employs is a combination of fundamentals and pure human intuition. One of the first opportunities Simons and his colleagues spot is the British pound. They believe that the pound is being held artificially low, so they begin to buy. As the value of the pound rises, they keep buying more. They then find similar opportunities in the Japanese yen, the West German Deutsche Mark, and the Swiss franc. Before they know it, the fund has grown from less than 4 million to tens of millions of dollars. But the good times won't last forever. Investors keep calling Simons. Before, it was to express gratitude and congratulations. Now, they call to ask why he is losing so much of their money. Simons becomes depressed as his losses mount. Sometimes I look at this and feel I'm just some guy who doesn't really know what he's doing. He confesses to a colleague.
I'd walk in one day, everything was going my way. Oh, I'm a genius. The next day I'd walk in, everything was against me. Oh, I'm a dope. It was a very stomach-wrenching business.
But Simons is no stranger to difficult problems. He is not going to accept defeat so easily.
Be persistent, don't give up easily, is one of my principles.
He works on creating a new approach that relies entirely on algorithms, eliminating any dependence on human intuition. Not long after Simons deploys this new system, it starts to accumulate potato futures. Simons doesn't understand why it is buying so many potato futures, but he trusts his system. Soon after, he receives a call from the Commodity Futures Trading Commission. They are quite unhappy that Simons appears to be cornering the entire market of potatoes. Simons is very amused by this. The regulators, however, are not. They force Simons to sell his position, costing him millions of dollars. After the automated trading system malfunctions by cornering the potato market, Simons switches his strategy once again. This time, he chooses a more value investment style. In 1982, Simons changes the firm's name to Renaissance Technologies to reflect their interest in investing in new tech companies. By this time, some of the firm's traders believe it is a waste of time to try to develop automated trading systems when they are making so much money using intuition and instinct. But after mixed results and conflicts with his colleagues, Simons again looks to develop new automated ways to trade.
I didn't really know how to hire people to do fundamental trading. I had hired a few, some made money, some didn't make money. I couldn't make a business out of that, but I did know how to hire scientists.
However, this time will be different. Simons is determined to find the holy grail in automated trading. In March of 1988, Simons launches the fund that will catapult him to legendary silverback status. The fund is named Medallion, after the awards in mathematics he and his colleagues have earned. Earlier styles of investing and trading employed by Simons focused on longer-term buy and hold strategies. After extensive research, he finds that some patterns are most easily exploited within a time period of several days, hours, or minutes, rather than several weeks or months. The Medallion Fund focuses on short-term patterns that Simons and his colleagues discover through rigorous mathematical modeling.
Renaissance is 100% model-driven.
Only about 10% of the new firm's trades are long-term. In 1990, just 1 year after implementing the new trading system, the fund makes 1 million in a single day. To celebrate the milestone, Simons pops open bottles of champagne for the team. Not long after, the Renaissance office is filled with champagne-sipping day drinkers on a near-daily basis. This practice ends not much later for obvious reasons. By the end of 1990, Medallion earns a return of 56% net of fees. After 10 years in the investment business, Simons is managing only around $45 million compared to the hundreds of millions his competitors are managing. He wants to grow the firm. He knows he has found his holy grail, and he wants to test the limits of its capabilities. There's just one problem. No one is willing to invest in the fund. Although the Medallion Fund has made gains of 56% and just under 40% in 1990 and 1991 respectively, investors are skeptical about this academic who makes great returns through unknown means based on secret mathematical computer models. They are also skeptical about the outrageous fees the fund charges.
5% flat, 44% of upside. But
yeah.
you still made your investors spectacular
We
amounts of money.
made good returns, yes. People got very mad at my investors. How can you charge such high fees? I said, okay, you can withdraw, but no.
While the standard fee structure on Wall Street is 2% assets under management and 20% of profits, commonly referred to as 2 and 20, Simons charges 5 and 44. More than a few potential investors and even some Renaissance employees think Simons is running some type of scam, but the continued success of the Medallion Fund is enough to sway uneasy investors. By 1993, Simons is managing 280 million. But he has a problem. With so much money to invest, he runs into liquidity constraints. He can no longer accept money from new investors without it becoming increasingly difficult to generate attractive returns. Simons is worried that the strategy he has used so far may end up not working as they become too big of a player in the market. He decides to close the fund to new investment. Simons becomes even more secretive with the fund and has clients call a phone number to a pre-recorded message with the fund's recent results. He also tells clients to speak with the Renaissance lawyers if they want more detailed updates on the fund. He is worried the fund's recently gained high profile will attract competitors looking to steal any information on Medallion's activities.
Everyone has signed a forever non-disclosure agreement and so on, because we're very secretive about what we do.
It's not long before Medallion's assets begin to swell from all of their profits. Now, managing 600 million, Simons faces the problem of size constraints once again. While some employees suggest they keep the fund at 600 million and keep investors happy by returning 200 million annually, Simons has other plans. He wants to be a billionaire.
It's nice to be very rich.
Up until now, the Medallion Fund has mostly been focused on the bond, currency and futures markets. And now Simons has his sights set on the final frontier of his investing career, the stock market. Simons had always wanted to trade stocks, but he and the rest of the Renaissance team have always struggled to make their trading systems work in the stock market. Medallion's stock trading system is finally implemented in 1995. Simons allocates 35 million to stocks, but the gains disappear when he adds more money to the system. The team begins to change the system, making use of machine learning in the computer models.
Well, in a certain sense, what we did was machine learning. You look at a lot of data and you try to simulate different predictive schemes until you get better and better at it.
One day, a Renaissance employee is going over the code in their stock trading system and notices an input for the S&P 500 is a static number, not an adaptive one that changes with real-time market moves. This means that the system has been using the same value for the S&P 500 in its calculations since 1991. Once this error is fixed, the system begins to generate the larger profits Simons had been hoping for. By 1997, Medallion manages over 900 million. Not long after, Simons becomes a bona fide billionaire, and the Medallion Fund would become one of the most successful funds ever created. Between 1988 and 2021, the fund returns a total of 4.3 million%. That means that for every dollar invested in the fund in 1988, Simons returned 43,000. An investment of $24 in the Medallion Fund in 1988 would have made you a billionaire by 2021. As Simons himself said, he made a lot of money and gave most of it away. Like many other billionaires, he feels a deep sense of responsibility to use his wealth to advance causes he believes are important. One of the most important causes to Simons is the education of American children. He believes that there are too many jobs available to capable mathematicians that pay far more than any teaching job. What does he believe can get more mathematicians to become teachers and improve the American education system? Cold, hard cash.
They're now paying the 420 teaching fellows in their program $100,000 over 5 years to supplement their salaries.
But I want to make the job sufficiently attractive.
Simons, through his foundation, gives money to help understand the processes that lead to the development of life. Among other causes, he established a foundation to further research and treatment of autism disorders. But Simons has not only contributed to the world through his charity and cash donations, but also as a practitioner. During his academic career, Simons co-authored a piece of mathematics that went on to become quite important in various subfields of physics.
Chern-Simon theory was born in mathematics, but physicists took the idea and applied it everywhere, opening a vast universe of possibilities.
Unlike many of the legendary investors and men of finance showcased on this channel, Simons has not reached the summit of only one field. He has reached the pinnacle in 2 careers, teaching at both MIT and Harvard, winning the highest prize in mathematics, all before starting from the bottom of the investing world to become the greatest investor who ever lived.